The U.S. Federal Reserve has decided to hold its key interest rate steady, but has hinted at least one more rise this year. With that in mind, the Bank of Korea will be making its own decision next month amid the already high rate gap between the two countries. Our Park Kun-woo explains.
The interest rate gap between South Korea and the U.S. remains unchanged following the U.S. Fed's latest decision to freeze interest rates for the second time this year. After a two-day Federal Open Market Committee meeting, the U.S. Fed on Wednesday decided to freeze its key interest rates in the 5.25% to 5.5% range. South Korea's central bank kept its rate at 3.5% in August, meaning the gap between the two countries will stay in the 1.75 to 2 percentage points range, at least until authorities make their next announcement on interest rates on October 19th. Speaking at a press conference, Fed Chair Jerome Powell said the latest decision to freeze rates is in line with its goals of achieving maximum employment and dampening inflation to 2% over the long run. And he hinted at the likelihood of additional rate hikes down the road. South Korea's Finance Minister Chu Kyung-ho in a meeting on Thursday focused on Mr. Powell's remarks about the possibility of interest hikes.
Following the Fed's decision, it seems that there is a high possibility that high interest rates will remain longer, along with increased volatility in the global financial markets. The government and Bank of Korea will be on high alert to address the situation.
The Bank of Korea also said future rate hikes by the Fed are possible. The Bank of Korea's Vice President Yoo Sang-dae said the bank will monitor how these monetary policies will affect the financial market for both Korea and globally. Park Kun-woo, Arirang News.